Tesla seems to be a company with massive support, especially in the retail investing community. So naturally, tons of people were tuned into their Q2 earnings report. The big question was whether Tesla was profitable this quarter. If they were, they are very likely to be eligible for inclusion into the S&P 500. There's a lot that goes into S&P 500 inclusion. I have an entire video about it, the rules, committee, and possible effects of the S&P 500 inclusion. I'll link the video in the description since it's a lot to digest. And there's also a lot of conflicting arguments out there. There are studies on the effects of S&P 500 inclusion, but then you also get famous investors saying that there's an ETF bubble. Tesla posted a profit this quarter, a rather large one too, giving them an earnings per share of over 1.14. After adjustment. The industry analysts predicted negative 0.07, which is kind of hilarious. Then again, a lot of these big companies have price targets in the lower 200s for Tesla stock. It's kind of shocking the difference in opinions about Tesla when it comes to the economic space. No one seems to agree. Tesla made significant amounts of money this quarter by selling regulatory credits. For those unfamiliar, the EU has several laws that control emissions from vehicles, and that also affects vehicles when they're sold. So certain major European companies like Fiat are selling tons of cars in Europe and need to get enough credits or else they face fines in the billions. Naturally, they pay millions of dollars to avoid these fines. Tesla only sells zero emissions vehicles, so they have plenty of credits to spare. It's gotten so involved for European auto that Fiat has actually come to terms with this long-term agreement with Tesla about credit sales. What's interesting is that while Teslas are very popular, most traditional auto manufacturers aren't selling their EVs in any significant numbers. It almost forces them to buy credits from Tesla or make better zero-emission vehicles. There are a lot of major takeaways from the earnings report, and there are tons of detailed analyses on these future batteries utilizing nickel, compact, lower-cost Tesla, Tesla demand for engineers, and of course the Tesla Texas factory. But I think the biggest thing to come out of this is just the fact that Tesla sales barely declined at all, while most traditional auto manufacturers had sales drop upwards of 30%. Now, Teslas are more of a wealthy person's car, especially since they don't have a large, affordable used market, and people in higher paying positions were definitely less affected in general. Obviously, it wasn't a fun time to be a restaurant owner or anything, so I think that plays into it. But if Tesla were to have a drop in demand, you would imagine now would be the time. This is something that Tesla shorters seem to keep saying. Tesla doesn't have demand, or they're going to run out of demand. Well, Tesla is selling cars faster than they can make them. Now, the stock price did spike up after hours, but then when the market opened, it dropped. And this isn't really surprising. Yes, Tesla destroyed all analyst expectations during earnings, but stock price fell. The same thing happened to Nvidia. Nvidia hit way better metrics than almost all analysts thought, but their stock price still dropped. You need to realize Tesla has skyrocketed in price. Huge swings like this always have some backswing, and this spike happened in a matter of days, and honestly, explosions like that aren't necessarily healthy. I really do think Tesla stock will go up over the long term, but you can't expect constant green, especially when it's this extreme. Some people are always going to take profit, and some people expect the moon. I've talked about overvaluing extreme price to earnings ratios in my Is Tech Overvalued video. I'll have a link to that video in the description below. But it's important to realize that prices on overvalued stocks reflect extremely optimistic viewpoints. They reflect future earnings. So even though a solid, well-run company like Tesla or Nvidia beat industry expectations by an order of magnitude, there's still a lot of people expecting the moon and more. I think Tesla's on a great track, and I think this earnings call was good for the company. But there are people who were probably expecting Elon to say he's officially taken over the world and that the U.S. military will be utilized to enforce state-sanctioned Tesla ownership under martial law. But just realize, a lot of these big tech companies are doing very well and are on the right track, but it takes more than a few days to grow into a share price. So don't be worried about a drop after good news. It's honestly not that surprising.